back to where we open the opening levels. Vikash Kumar Jain is with us. He's investment analyst at CLSA. Vikash, great to have you with us here. Thank you very much for your time. I just want to start by talking to you about the Kirit Parikh panel recommendations, and we're on the cusp of the end of the financial year. An approval has to come, but will it come is the question. Do you see any reason why it should not, Vikash, and how important is this for the sector?
Sure. Hi, thanks for having me. I would say that that is a recommendation which is where the whole process, all the key ministries like the oil ministry was involved in the whole suggestive process itself. And I think it will be rather odd for them to not then go ahead and complete the whole process and implement it. So I would say that it should most likely play out in that manner, that, the final approval should come in from the cabinet. It is something which should be more important for the consuming part of the sectors, that is, the consuming companies, city gas companies per se. In addition, even for the upstream companies, I would say that it just brings in a higher predictability. So essentially, if you were to look at the gas price, the floor price, which has been approved by the formula, that is $4 per MMBTU, across the life of upstream companies, they have not realized the gas price above $4 per MMBTU for more than just 4 quarters. Only in 4 quarters, 2 of the last quarters, and there was 2 quarters earlier in 2015-16 when they had realized the price of more than $4 per MMBTU. So our opinion has been that it will be a kind of a win-win formula, where, of course, the gas consumers are the obvious beneficiaries, but even the upstream companies actually benefit out of it.
Okay. In fact, Vikas, in your report, you write that you've raised IGL's EPS by 6 to 15%, and it's a very rare combination of double-digit volume growth as well as pricing power. So is it just for IGL, any other companies in your universe that you would raise your earnings estimate for, and what kind of price targets are we looking at?
I mean, so let's not get very stock specific, but clearly within the city gas space, as our report points out, there are a couple of names that we like more than the others. So let's just keep it there.
Okay.
Vikash, just turning attention to the markets then, the short while, a few weeks ago when we spoke, you said we're not in extremely bearish territory. But from there on, the breadth of the market just worsened. We have stocks that are falling off the cliff. Are we almost there now in terms of forming a bottom and heading into peak bearish zone, or do you believe we still have more to go?
No, I think, Nigel, that's a lot has changed since we last spoke. Yeah. So SVB, Squeeze, a lot has happened. In fact, I was just looking through certain interesting points that unless there is some magic that we are able to get in the remaining part of the session today and on Friday, this will be the 4th month where Nifty is going to close negative on the trot. Now, I just did a little bit of a basic digging. Over the last 25 years, this will be the 3rd time that Nifty has given negative returns for 4 months on the trot. It has never given negative return for 5 months on the trot. I mean, so just to there's always the first time, but just to give you a sense of how rare this continuous negativity has been. Overall, valuations have become a bit more palatable. And that is something that we should also kind of bear in mind, that, and more importantly, our proprietary India Bull Bear Index that we use to track sentiment and to quantify sentiment is hit an extreme bearish zone. That is, it was almost over 90% bearish on the Monday when we made a fresh low on Nifty. That is about a little over 1.5 weeks back. Historically, that indicator has worked very well as a buying zone, other than periods when we've had free fall kind of declines. That is, other than 2008 and 2020, it has worked very well. I would say that from a narrative basis, over the last 3-4 weeks, we have globally changed into a narrative where we are now expecting almost 100 bips cut in Fed fund rate before this calendar year ends. I think that in a way is implicit that market is expecting a very significant recession to come in very soon. The first rate cut is, I think, penciled in sometime around July or so. So if that is really the case, then sometime in the next 3-4 months, market expects something big to happen. Although the events that have played out are negative, we don't believe that things will play out on an immediate basis. So there could definitely be at least a tactical up move that we see. So recently in our focus portfolio, which is, by the way, done pretty well, it's kept its track record. This will possibly be the 9th quarter when it outperforms the Nifty. We've had it only for 9 quarters, so almost an unblemished track record. We've added beta in that portfolio just a few days back. So that's how we want to play this tactical trade. At least from here on, we should see some kind of a relief rally at the minimum.
Okay, well, that relief rally is long in the coming. It's not come yet. Vikash, you said that there'll be the 4th instance, only the 3rd time this has happened. And if this is a rare occurrence, but the occurrence is occurring, what is the longest that we've gone down for? I mean, in the last 3 instances, did you look at it?
Last 3
How many
instances?
months?
No. So what I was mentioning was 4 months on the trot, negative returns.
Yeah.
This
No, I got that.
Yeah.
Yeah.
So
no, I'm saying...
absolute
absolute
downside have historically at times been much bigger. So that's the interesting bit, that this doesn't look like a dramatic decline at the benchmark. It looks more elongated pain. Despite falling for 4 months, we are down only about 9, 10, 11%. I think that from that absolute perspective, it looks like the market has digested a lot of bad news.
Okay. That's the second person telling us, right, that the market has digested a lot of bad news. I think Venugopal Gare was the other one.
I think the market has got a big appetite. It keeps on digesting.
That's the first time we're going to see
Unless something breaks
years.
in a big way. We should not have a waterfall decline. If we've not had a waterfall decline, our proprietary bull bear indicator has worked 9 out of 10 times in the last 15 years.
All right, Vikas, the last time you joined us, you said we're not yet there. Now you're indicating maybe we're almost there in terms of peak bearish zone, and maybe a bit of a relief rally could be on the cards. Always good hearing your thoughts, Vikash. Thanks so much for stopping by and filling us in with your take on various sectors as well as the markets on the